Jesus.
Ladies and gentlemen, this is your PPSA, your Party Pooper service announcement. Just because something has gone up in price does not mean it's a good investment now. Thank you.
Hey guys, we're back with another more casual video talking about risks in investing. And today we're talking about Bitcoin. We have a bit of a break with our video scheduling, so I figured I'd touch on the topic because as many of you know, the cryptocurrency is going through somewhat of a second renaissance, if you will. Hitting a brand new all-time high of over $40,000 and up roughly 300% or over 300% over the past year. Which is a remarkable return. And the thing is, Bitcoin's actually something I've covered in the past. I made my first opinion piece video, my first party pooper video, was on Bitcoin, where I talked about how I thought it was a high risk asset, a speculative asset, that didn't make it for a great retirement asset, and that was possibly in a bubble. But admittedly, you know, that was 3 years ago, and things have changed with the cryptocurrency since then. On the one hand, companies continue to adopt the currency. We've seen Square and PayPal pushing it as, you know, an option on their platforms. And on the other hand, with us going through a global pandemic and the US Federal Reserve, you know, employing stimulus measures to support the economy, a lot of people have seen this growing fear around inflation, that the US dollar might actually see its value depreciate faster than it has in the past, with massive quantitative easing and all these things that, you know, sort of, you know, makes that drumbeat louder for Bitcoin. So people are now asking, you know, with all these developments, have my opinions changed? And the answer to that is no, not really. Bitcoin in my eyes is still a high risk speculative asset that risks being in a bubble. You know, as with anything that skyrockets in price. In fact, you know what else is considered a speculative asset? Other currencies. And it's not to say that Bitcoin can't keep going up in price. I don't know where it's gonna go.
But just because something is speculative doesn't mean its price can't increase.
The only reason people speculate is because there is an upside. So of course it can continue to go up in price. But at the end of the day, there's no tried and true method for determining its value. So Richard, if you're not gonna provide any in-depth analysis or tell us which way Bitcoin's gonna go, why make this video? I was gonna get to that. My friend let me borrow this. I wanted to find a use for it. As with the first time we saw Bitcoin see a surge in popularity, we started to see some red flags and concerning trends and attitudes in the investment field. And I really just want to address that because, you know, there are a lot of people being irrational with their money when they see things like this happen, when they see these giant rallies. And today I want to highlight 4 reasons why I myself don't have any money in Bitcoin. This isn't a bear case for the cryptocurrency to argue that it's going to crash or whatever, but these are things that I struggle with that make it easy for me to put into my too hard pile. And there are going to be people out there that call me an idiot for not buying Bitcoin, but realistically, you know, I've never suffered for not taking an investment. So I think I'll be okay. The first is that there's no real method for determining what the true worth of a Bitcoin actually is. It's fundamental intrinsic value. You know, it's difficult to find the intrinsic value of anything, and you know, you'll never get it on the exact dollar. But at least with stocks, you can sort of estimate it. You can use, you know, forecasts of future earnings that if a company earns this amount over this amount of time, that the price will be this. And there's no real model, you know, tried and true model for Bitcoin that, you know, works to find that same value. And while I've seen a lot of articles arguing that Bitcoin's going to hit certain price targets like 400,000, $1 million per coin at some point, the truth is that no one in the industry knows where the cryptocurrency is going to go. The truth is that they're all applying brand new models that haven't been tried and tested before. So it's almost like everyone's throwing stuff at the wall to see what eventually sticks. But that makes each individual, you know, model at a high risk of being incorrect. You know, as an example, there are some people who try to apply like a trading multiple sort of thing to Bitcoin, doing something like the value of all Bitcoins out there divided by its transactions. But that's not something that, in my understanding, has ever been shown to mean anything. Another thing people like to use, for example, is a lot of people argue that Bitcoin's history shows that its price always hits a new high after crashing from its past peak. But I would argue that, you know, we don't really have enough of a track record to know that that's a rule of nature. And there's a chance that that's violated in the future, especially when you consider that Bitcoin today is vastly different, both in terms of utilization and its actual technology, than it was even 5 years ago. While this is something that's more of an opinion than anything else, I do think a lot of Bitcoin's price appreciation is just tied to people, you know, trying to get quick money. It's not tied to fundamental demand for the cryptocurrency. Well, it's hard to gauge that fundamental demand of people using Bitcoin as a replacement for fiat currency or gold, for example. There are some charts that show that, you know, Bitcoin's not really being used a lot more than it was, back in 2017 when it hit its first peak. There's transactions per day are roughly the same, and I actually think independent or unique addresses is less than it was back in 2017. So while that might not be a smoking gun, for example, it does raise a red flag. Secondly, I still struggle with the idea of Bitcoin being a good substitute for the US dollar, for, a fiat currency, if you will. Now, I know not everyone argues that Bitcoin is going to eventually replace the US dollar, but some people do. And to that point, I would argue that, there's still a lot of issues with having any sort of, money or currency that fluctuates so drastically in price. It makes it near impossible to run an economy off of it. And quite frankly, there are a lot of things about Bitcoin that, from the user's perspective, might make it, less attractive than the US dollar. This is inflation aside, which we'll get to that, don't worry. But for a currency to substitute something so ingrained into our economy like the US dollar, it has to be kind of perfect. And there are things about Bitcoin that aren't perfect. For example, the fact that you can lose all your money if you forget your password. We've all seen that story about that guy losing hundreds of millions of dollars because he forgot his password. So God forbid that gran ever puts all of her money into Bitcoin because her grandson told her to, and then has a senior moment and forgets what the third digit of her password is, with no middleman to rectify the situation. That's one advantage the fiat currencies have over things like Bitcoin. Is yes, the middlemen suck at times, especially for things like international cross-border transactions. But they do provide security in another sense of the term, in terms of password recovery, in terms of reversing transactions and, rectifying theft and things like that. And I know that people view Bitcoin as being the end all be all of security, and I understand the arguments for that. But, since when did people start caring so much about their ledgers? I've never heard before Bitcoin of people caring that the bank had the ledger for their bank account information. And probably one of the biggest things I don't really buy around the Bitcoin argument is that, fiat currency is garbage. Now, hold on, I know some of you are grabbing your pitchforks and your torches right now, but all I'm saying is that before Bitcoin and cryptocurrency, I don't know about that many people that complain about inflation. In fact, if you look at inflation figures, which I know some people don't put much faith behind, but if you look at the figures, we have some of the lowest inflation we've seen in US history, at least since the 1940s. I get that there are concerning things with the Federal Reserve. They have done massive quantitative easing that, while it hasn't been reflected in the inflation rate yet, could very well lead to inflation in other areas. We've already seen stock prices continue to rise, and I get that that's a concern. But do you think maybe for a second that what the Federal Reserve is doing might be helping the economy? That perhaps this was the lesser evil available to them, that, them and all other prominent economists around the world are employing the same strategy because they understand contractionary policies in the past had very drastically worsened past recessions. And sure, this might cause further problems down the road. I'm not arguing that, but maybe, just maybe, they might view it as being worth it. No? Money printer go, okay. If you believe Bitcoin's not a great currency, but it stands as a good store of value, which, I'd be more inclined to believe that argument, it's not likely to continue increasing in price excessively over time. And to understand this, you can just look at gold, for example. Gold is another store of value, a safe haven, if you will, or at least some people view it as being a safe haven, that over the past, downturn, increased in price. It fell initially, which is kind of strange, but it and Bitcoin both increased initially as people kind of fled the markets and looked to put their money into something safer. But, with things kind of recovering, at least on the stock market front, money has come out of gold and gone into the stock market. And there's certainly a chance that that'll happen with Bitcoin as well. The whole point of a store of value is to kind of exit the market and put your money into something as you wait things out. So when things recover and the storm passes, money tends to leave those assets. That's not to say it doesn't appreciate over time, but most investors don't expect double-digit returns from non-producing assets over the long term on an annual basis. And finally, what's admittedly more of an anecdotal point is that I still think there's a lot of dumb money in Bitcoin. It's not to say that people who own Bitcoin are inherently dumb money, but, on the one hand, a lot of people still argue, for Bitcoin, but from different perspectives, contradicting points about why Bitcoin's valuable and things like that. On the other hand, I can't count how many, emails I've gotten from cryptocurrency services, asking me to promote Bitcoin or their service, to sponsor my channel. And to me, that says that there's a big oversaturation in this space. Not to mention that some of the people who have reached out to me for these sponsorships sort of, make these weird statements that, again, are just red flags to me. I had someone ask me to promote Bitcoin as a good retirement asset on my platform, even though from a portfolio management standpoint, retirement money isn't the money you use to put into speculative assets. So I don't believe there are many portfolio managers out there, professionals, who would believe that cryptocurrency is a good retirement asset. I also had someone from another company argue that Bitcoin had the best PE ratio of any investment asset in the universe. Bitcoin doesn't have a PE ratio. And that's what kind of concerns me, is the fact that these are the people that are running some of these companies and promoting Bitcoin while clearly, not understanding aspects of it. And finally, what I do really believe is a sign of vast dumb money in a space is when you have all these people without economic backing, financial education, arguing that Bitcoin is the future, that there's no alternative, that there's no way Bitcoin won't become the currency or safe haven of the future. And as I've said before, there's no guarantees in investments. Only a Sith deals in absolutes. It's not to say that someone who says Bitcoin's going to go up might not be proven right. But the point is that the fact that they're making that claim in the first place shows that there's kind of this fundamental lack of understanding of how investments work. The point of investments is that you need to take on risk to get return. And you need to understand that there's a lot of risk with Bitcoin, especially when you're expecting these high returns. There's no such thing that offers one without the other. And the more times I hear people argue that Bitcoin's a sure bet, that it's guaranteed to be the future, the more I'm kind of shied away from it. Anyway, those are all reasons why I'm happy to sit on the sideline and wait to see what happens with Bitcoin, rather than, risking my retirement assets. There are smart people who hold Bitcoin. It's not all this fanaticism and these irrational arguments. There are people who make very coherent arguments, and other people who just want to hedge their bets and put money into cryptocurrency. And if you have your money in Bitcoin, I truly am rooting for you. But you should understand the risk side of things. From a portfolio management perspective, you should not be risking your retirement on these speculative assets. And if you're an investor who doesn't own any Bitcoin, just know that that's okay. You're not alone. And it's okay to not invest in something you don't fully understand for fear of missing out. But Richard, you're going to miss massive returns. Maybe, but that's fine. But you'll be left behind as fiat gets crushed. Probably not. There are other ways to invest, but I appreciate your concern.
But the great wealth transfer is upon us.
No one, I repeat, no one knows where Bitcoin's going to go in the future. Not me, not DragonSlayer64 in the comments section, not Bill down the road who works at the mechanic shop who's been watching a lot of Austrian economics YouTube videos lately, and especially not you big dummy brain.
And to end this video, I'd like to highlight sort of an excerpt from The Education of a Value Investor by Guy Spear, where he talks about, the checklist he uses to determine whether he should look into a stock or just ignore it. And one of the things he uses is to never buy into something that he's being sold on. Whether it be a fund or anything, the moment someone is trying to promote it to him, he'll just ignore it. And that seemed to work well for him, and I'm happy to employ that same strategy. So thank you for joining me today, guys. I hope you enjoyed the video. I promise I'll be getting back to more educational, structured videos in the future, but I did have kind of a break and I wanted to address what's come back into the news. So thank you for joining me today, and as always, be safe out there.